Hey, what's up, guys? Welcome back to the channel. Happy holidays. Hope you guys enjoying your holidays. So I was reading this article and a couple interesting things came up, and they were talking about it used to be only 30% of Americans investing into the stock market. Now we have over 50% of Americans investing into the stock market, and that is really good. The numbers are growing every day, every week. So what I'm going to do is I'm going to give you my rules to investing. So let's get this started. So first thing we're going to start off with is you're going to want to do your own research. I talked about that in previous videos, picking the best and right investments for you, not listening to someone else, because if you listen to someone else and you make a lot of money, you may not learn or know exactly what you did other than listening to somebody else. And if you lose a lot of money, then you may be discouraged from actually investing into the market. So do your own research, pick the right investments for yourself, and grow and learn. And that way you can have a better, brighter future. So you want to start investing as early and as often as possible. And don't worry about short-term fluctuations. You're investing for the long term, because time in the market beats time in the market. Every year as your income increases, you're going to want to increase your contribution to your investments as well. Next, we're going to talk about diversifying your portfolio. So you got cash, stocks, bonds, business, and real estate. You're going to want to have a diverse portfolio of investments. That way, it won't go down. It won't completely kill your portfolio. It won't completely kill your net worth or your wealth. So even though cash is one of the worst investments you can possibly have due to inflation, every year the value of a dollar goes down. It's always good to have cash sitting on the side. So that way when you have a buying opportunity inside the market, whether if it's stocks, bonds, or real estate, you have cash sitting there. That way you can go ahead and deploy it and put those dollars to work for you. Now, you're always going to have to remember that there is risk when it comes to investing. There's going to be a lot of volatility, but volatility can be your friend because it can create a buying opportunity for you to be able to buy at a lower price and then sell it for a higher price later on. So especially in stocks and real estate, as an example, Apple took a real big hit December 2018. They dropped a lot due to the trade wars and tariffs and saying that iPhone sales are slowing. But now here it is December 2019 and they rose 80% over the course of this year. So a buying opportunity was created, and if you had cash on the side, you could have went on and invested into Apple and rode the wave up 80%. So like with real estate, when the housing bubble burst back in like 08, 09, there was a lot of cheap real estate on the market, a lot of cheap land on the market. And for those who had money to put into real estate, they are doing really well right now because over the last 10 years, real estate has skyrocketed and all its values, prices, rents, everything. Real estate has gone way up. So always keep cash on the side just for a buying opportunity. And you never want to go all in on your investments anyways. You always want to keep some cash on the side. But when that opportunity presents itself, you got to take full advantage of it and grow your money. So just like in the previous video, I talked about having an emergency fund. Once again, I'm going to always stress having an emergency fund. You're going to want to have 3 to 6 months saved up as an emergency fund. That way you don't have to cash out your investments. If you come onto hard times, you already have 3 to 6 months worth of living expenses saved up. So let's just say you lost your job. You got 6 months to find a new job before running completely out of money. You don't have to worry about tapping into your investments. Your investments can still continue to grow for a later date. And then you can go ahead, get your new job, rebuild that emergency fund, and then start reinvesting back into your investments as well. All right, so you're going to want to keep your costs low as well. So if you're buying index funds or mutual funds, or if you're using a fund manager, you're going to want to try to keep your costs as low as possible. That way you can profit as much as possible. Do your research, look at the best index fund that you can find, pick the best fund manager or best mutual funds you can find. You want to get the best value for the lowest price. That way you can have more profit later on. All right, so you're not going to want to watch your stocks daily. It's going to drive you crazy because there's a lot of volatility in the market. The prices are always fluctuating, going up and down, up and down, up and down. Don't do that. Your emotions will get the best of you and you'll start making irrational decisions. You'll start selling off when you shouldn't be selling off. You won't buy in when you should buy in. So don't let the market drive you crazy. Volatility is always going to be there. Just take advantage when you got a buying opportunity and sit back and let it grow or sell for a profit when it's time to make a profit. But you always want to remember, long term is key. You want to invest for the long term because on average, the market goes up 8 to 10% per year over a 20-year span or a 30-year span. So you're going to want to invest for the long term. Don't worry about short-term volatility. As long as the fundamentals of the companies that you're investing into stays the same, I wouldn't worry about selling them or getting out of your positions. If anything, buy more and grow your positions. News come out every single day, and it's good news and bad news. And when those news stories come out, it may not have nothing to do with the company. It could be something going on with something internationally, something that Donald Trump said. It doesn't matter. Whatever's being said, don't worry about it. Just look at the fundamentals. As long as the fundamentals don't change, if the price go lower, buy it. If the fundamentals do change, you may want to reconsider and do some more research and possibly get rid of that investment depending on how the fundamentals change. So those of you who want to get started in investment, I'm going to put a link in the description below to an investment app called Robinhood. Just by using my referral link, you can sign up, you'll get a free stock. So for you seasoned investors, hit the comment section down below and let me know what some of your rules of investing is. If you got different rules than me, if you got the same rules, if I missed something, we can all learn and grow together within this community. So hit the comment section and let me know. So with that being said, thanks for checking out another one of my videos. I got more coming soon, so stay tuned. Thank you.